All right. What's up, everyone? Welcome back. All right. What was it? Wednesday, I put out part one of the Delta series, and I introduced just some general concepts, how Delta impacts your option premium, and we discussed the ranges of Delta and how theta affects it. And in today's part, I want to do a little bit more of a deep dive about the delta values and how you should be thinking about delta when you are picking an option contract. And this still affects, even if you're trading stocks instead of options, understanding the delta can help you think about expected price movements and probabilities, which would overall give you a much higher accuracy on for targets and exits and entries and stops. Okay, so let's take a look at an option chain here. This is SPY. Let's take a look at 0 DTE for SPY. It's bouncing at the moment. Okay, so here is the option chain for SPY. And the first thing I want you to start thinking about the deltas is that instead of just thinking about it like, oh, this is how much my option premium is going to increase by for every dollar movement. That's what was covered in lesson one. I want you to also start thinking about the deltas as a probability. Okay, more of a probability metric. So, for example, if you pick a strike that is 65 delta, right, 0.65 delta, you need to think about it more like there's a 65% chance that this strike is going to be in the money. Okay, that's the first thing about delta. So whatever the delta value is, multiply it by 100, and that's your percentage of having that strike stay in the money. And just like we talked about, ranges go from 0 to 1. So of course, if you pick a strike that's 595 and it has a 99 delta, the likelihood of this contract staying in the money is 99% chance high, right? Now, if you pick a contract for the calls that's like 613 and we're already almost half the day is done. We're at 603, almost 604, and you're shooting for 605. This is 0.007. This is less than what? Less than a percent, right? It's just like 0.7% chance of getting in the money, right? It's going to go worthless. So that's the first thing I want you to start thinking about. And this framework is also useful for stock traders, okay? And what I want to share with you also is a couple secrets about the delta values. Okay, secret number one, the 50 delta is usually represented at the money strikes for shorter expirations. Okay, so like right now we're seeing, if we take a look at SPY, it's 1:30, 1:40 p.m. Eastern time. We have a 53 delta here at calls. Here's a delta for a 604 strike, and then a 605 um 20 yeah, 605 strike with 24 deltas. Somewhere in this price level lies the 50 delta. Okay, if we take a look at the puts, it's the same thing. We take a look at 604 delta, which is 46, and we take a look at 605 strike put, it's 76 delta. Somewhere in here is the 50 delta. So if we could go even for December 16th, 3 days till expiration, it's the same thing. 47 delta, 61 delta, somewhere in between these strikes lies the 50 delta. So that's the first thing, that's the first little secret. Okay. Now, this applies for shorter expirations. So if you go further out, I'm talking about months, almost a year out, the 25 delta for most cases, let's say maybe not for puts, but more for calls, there's going to be times for either side where you may see the 50 delta deviate slightly further out of the money. Okay. And this could be just because of implied volatility. It could be just a high anticipation for further out price. But for shorter expirations, the 50 delta is typically represented at the money strikes. Okay. I'm going to take a look at 3 days out because this day is practically done. We could take a look at this as well too. Okay. Let's take a look at this option chain. Secret number 2 about the delta is that typically the 25 delta represents the expected price movement from the current stock price for the given expiration date. Okay, so what I mean by that is that right now we are at 604 strike, and when I want to look for where is the likelihood of SPY, how far can SPY go to the upside? Let's say you have an upside thesis. What's the highest it could go for by this expiration date? So by December 16th, as of right now, you can have a really good probability that that SPY can go to somewhere in between 606 and 607 strike, because somewhere between these strikes is the 25 delta. And it's the same case for puts. Let's say you have a put thesis instead, and you want to figure out what's the expected price that it can go to the downside. Where's the 25 delta at? It's somewhere between 601 strike, right? This 18 delta, and 602 strike. It has a 26 delta. So somewhere in between here lies the 25 delta. So you can expect SPY by this expiration, if there's a bearish thesis, that it can go all the way down between 601 and 602. Okay? Because again, the 25 delta typically represents that this is the expected price movement for this expiration date from the current price that it's at. And so as you're trading, okay, so let's take a look at 2 scenarios. Let's say you're trading stocks. What does this mean for you? This means that you can have a higher probability in knowing where the price is going to go to, like a range of, let's say that you're going to go trade the equity itself. You could be more accurate with your targets, okay? This applies for both option traders and stock traders. What's the likelihood that it can get to this expiration? I want to do a short-term trade for SPY, hold the shares for a week. Everything looks good. Now, what can I expect for price movement from here until X amount of date? Okay, so that's pretty easy with shares. But as a trader for and as an option trader, now you have to keep in mind theta, because remember, theta will affect the delta if the longer it stays out of the money. So your objective now as an option trader is also to understand what's the highest you need to pick a contract that gives you the highest likelihood of getting in the money, from out of the money to into the money. And so if you know that the 25 delta is the expected move for either the downside or the upside, you want to pick a contract that's somewhere between the 25 delta and the 50 delta. Okay? The sooner you can get the out of the money to into the money, the more intrinsic value it has, and the less theta will affect the contract, because the delta is so dramatically high. It goes from 50, 60, 70, and so on, right? And theta decreases the more the contract goes into the money. And this applies also for the short side, okay? If you want a short thesis and you want to pick, like, what contract do you pick is the question you have. Where's the 25 delta and where's the 50 delta? And pick a contract that is in between that range, okay? That is how you pick a contract that has a high probability of going from out of the money to into the money. Okay? So just to recap, when choosing option contracts, use the delta to assess the probability of going into the money, right? And for high probability trades, you want to select strikes that are anywhere between 50 to 25. That is the, the lowest, highest probability chance that you have. Also, keep in mind that as an option trader, when you're picking out of the money contracts, you want to get them into the money as quickly as possible. The longer out of the money contracts stay, the more value, like the option premium value, degrades due to theta. Okay, theta's working against you, so especially for short-term expirations. So by knowing how this delta information, now you can make a much better informed decision to manage your risk and also pick a strike that has high probability of becoming profitable. And for stock traders that think that this doesn't apply to you, this applies to you. Okay? And I'm going to explain in the next video how this is even greater for this applies not just for option traders but also for stock traders. All right, so yeah, so the next video is going to be about discussing projecting future pricing for a stock and hopefully help you set a long-term targets for bullish or bearish trades. And again, if you have any questions or if something wasn't clear, just feel free to ask or drop a comment below and I'll get back to you with that. Peace.